Hello, everybody. Welcome to this week's edition of Northwest Quadrant Wealth Management e-News. Thank you for joining me. As you can see, Josh is not here today because he has some exciting news. Josh's wife, Colleen, had a baby boy last Friday named Matthias. So Matthias was more than 3 weeks early. So it was a little bit scary at first, but everybody is happy and healthy. And Josh's other son, Grayson, is excited to have a little baby brother. So we're excited too to have a new addition to the Northwest Quadrant Wealth Management family. And if you have Josh's email address, you can certainly reach out to him and wish him a congratulations. He will be back before he probably wants to be, but you can talk to him soon. Anyways, let's talk about what's going on in the capital markets and in the economy. And then we can talk about market timing, because that is a common theme that a lot of people want to start participating in, and we know it's a loser's game. So this morning we got some more economic data that showed the inflation data for the month of May was still hot. It actually was lower than economists had predicted, and it did show that it has declined the last couple months. So maybe we have already seen peak inflation. Only time is going to tell. It is still much higher than the Federal Reserve wants it to be, and so the Federal Reserve is going to have to continue to raise interest rates to try to kill the demand side of the economic equation. They are also selling bonds, U.S. Treasuries, mortgage-backed securities, and corporate bonds into the bond market, which is also pushing rates higher. A lot of people wonder why mortgage rates went up so quickly, and it's because the Fed is selling mortgage-backed bonds in the bond market, and so there's a huge supply of mortgage securities in the market, thereby pushing rates higher for them to be attractive to other investors. So the Fed is going to have to keep the pedal to the metal. The alternative is 70s style stagflation, where we see very slow growth and high inflation. We do not want that. So most likely the Fed, if they haven't already pushed us into a recession, they're going to push us into a recession, which, believe it or not, I can't believe I'm saying this, is good for the long-term health of the U.S. economy and the market. The best thing that can happen, we have a shallow recession, demand subsides substantially, we have asset prices come down, which means inflation comes down, but then we can build off a much stronger base for the economy and the stock market, and long-term we'll be in a much better position. The other sort of silver lining there is we will finally earn some yields on our fixed income securities, the bonds we own, the CDs, anything that pays a fixed interest rate will finally have some yield. So that's some silver lining there. The other thing we should talk about is if you go back to 1900 and you look at all the events that happened in this country's history, forget the stock market, but the wars, the oil embargoes, all the things that have happened in this country's history, you realize every single year there's been a reason or reasons not to invest in the stock market. I don't like this president, I don't like the next president, I don't like who's in Congress, I don't like my governor. All these reasons you could say are legitimate reasons to not invest in the stock market. But obviously if you had invested in the stock market over time, it has rewarded you handsomely. Because remember, a lot of you focus on the stock market itself rather than what the stock market is, which is a collection of wonderful global businesses. So if you think about Costco and Nike and McDonald's and Amazon and Google, all these businesses that are wonderful businesses and will continue to be wonderful businesses. Well, of course, in a recession, their earnings are going to decline, and that makes them worth less in the short term. But over time, over your investing lifetime, their earnings will continue to increase, and thereby their stock price will also increase. That's going to continue out into the future. This recession, like all recessions, will end, earnings will continue to grow, and stock prices will go higher. There's this common misconception out there that you can time markets, that when markets get like this, people want to do something, when oftentimes the best thing to do is nothing and ride it out. And so a lot of people want to try to get out of the market to avoid more pain, and then they say they'll get back in. And so we know here at Northwest Quadrant that time in the market, not trying to time the market, is the path to success. And I wanted to share with you a little bit of data. So the last 15 years through the end of last year, so if you go back from December of 2006 to December of 2021, which is a 15-year period, if you were fully invested in the U.S. stock market, which over that period, by the way, included the financial crisis, the 2008 financial crisis, if you were fully invested in the U.S. stock market, the S&P 500, you achieved a 10.66% annualized return. 10.66% for a 15-year period per year. If you miss just the 10 best trading days in that 15-year period, your return gets cut more than in half to 5.05%. If you miss the 20 best trading days, so only 20 days in a 15-year period, your return goes to 1.59%. And if you miss just the 30 best trading days in a 15-year period, your return goes negative 1.18%. So remember, it's time in the market, not trying to time the market, because if you try to get out of the market and miss some of these unbelievably great days, your returns become abysmal. And this information comes from Putnam Investments. So again, we know it's painful. We don't like it any more than you do, but this too shall pass, and we'll see brighter days and markets will trade higher. You have to have faith in that, because the American system, while it's certainly not perfect, has unleashed human potential like nothing else ever has, and that's going to be true out into the future. So as always, if you have questions about your situation, your account, you can call us at the office, 800-743-0988, or you can send me an email, Tyler@northwestquadrantwealth.com. We'll see you back here in 2 weeks.